Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Now let's take a look at the gold market. As you know, as I said many times in the comments, that right now gold market is very it looks very nice, and every time it is pleased us with the behavior, how it behaves, since right now the behavior of the gold market even could be posted in some theoretical books how the bullish market should behave. So on the daily chart, it's absolutely predictable action, and the fact that market is following it gives us some confidence that it's really we correctly understand what's really going on, and by this using this as a some foundation, we could make some next forecasts and next expectation. So on Thursday we said that market has hit the major target here. I mean on major target on the daily chart, the short-term bullish target. This is butterfly destination point 127 extension. Also there was some inner ABCD pattern has been hit, target has been hit. So, and we said that probably on Friday market should turn to retracement, and this really indeed has happened. But at the same time, it's not necessary that retracement here should be deep, because market right now is not at a very bad. It's not some real significant resistance, just the first target of the butterfly. And to make the respect of the butterfly, market is sufficient to show just a 3-8 retracement here. Also, we said that probably market should retest these former tops, so around 1106 area, and this in general will be enough, and we could treat it as the minor minimum retracement that should follow. But currently, guys, it will not be the strategy if market will show some deeper retracement, and this will not be the cancellation of the bullish setup. This will be just another retracement, so it will be just possible 2-leg compounding retracement down. But in general, it will keep the bullish trend. It will keep the bullish setup in the short-term perspective, and this will not be some really outstanding. That's why, although it will be nice if market will continue to move up right from here, but if market will show some deeper retracement, this will be not the problem in reality. And as this next destination of the possible retracement, we should watch for this area. This area around 1102, 1106 zone, range. So as you can see, this area includes monthly pivot point that has been tested yet. This is the February pivot point. That will be the MACD predictor support. It's not indeed the support, but this will be the line. This point will show that trend will remain bullish until this level. If we will get here, for example, some bullish grabber right at this level, that will be just perfect. And finally, this will be the first 3-8 fib support from this low to this top, 3-8 retracement. So as you can see, this will be just minor 3-8 retracement of the butterfly swing. So this is the minimum retracement that market could show. Another advantage here is this stands with this confidence support. So we take a look at 1093, 1096 area. It's very good that we have the confidence right here. So if you guys would like to take the long position, you probably first should watch for this level with the simultaneous hiding your stop below this level. That will be an initial setup for taking the long position here. That's why existence of the confidence is very important. It will work not just as strong support where we could place below which we could place our stop order, but it will work as an indicator as well. For example, if market will suddenly unexpectedly will drop this confidence support, this will be the indication that short-term bullish setup is over. So market has turned to the really deep retracement. It will not mean that market will not turn to the upside a bit later, but it will tell us that the current action that stands from this low right to this top will be over. So if market will drop below the confluence, it will tell us that we should forget about this butterfly, about all extensions that stand with this swing right now that we trade since middle of December. If market will hold above it, and it will be better if market will hold above this area and turn to the upside, then this short-term setup is still in the game. That's the simple logic that we have right now on the daily chart. What we should watch for on the 4-hour time frame chart. On the 4-hour time frame chart, guys, a couple of moments to discuss. First of all, on the chances possible upward continuation immediately. Well, these chances are not really small. Because take a look, that was the level that we have discussed initially. Recall our discussion on Thursday when retracement has started. We said that probably this level should be reached because we've got the double repo pattern. That was the 50% support of this most recent thrust. Also, guys, if you remember, this was the confidence support from this low to this high, this one 1106, and also from this low to this top. Somewhere here we've got the 618 FIB support. This was reaction on the gross domestic product release on Friday. But take a look how market responds on this reaction. So market has formed some kind of the combination of the high wave pattern and the hammer. So the body stands not at the top as hammer should have, but still it stands above the middle range of this pattern. At the same time, guys, this is the high wave. So it doesn't show the direction by itself, but the extreme points of this pattern are very significant. Usually, when market forms the high wave, then for some time, price stands inside of this range, and we really see this. So you can see 1, 2, 3, 4 periods on the 4-hour time frame chart, price stands inside of the range of this pattern. But when the market breaks some of the extreme points, for example, this one or that one, it usually leads to the continuation in the direction of the breakout. So that's why currently chances exist that market really could continue move to the upside right from this area. Also, guys, I have drawn this trend line not just occasionally. Recall what we have discussed on the hourly chart. Here we've got the wedge patterns, falling wedge, and we said that this is the major pattern on the hourly chart that we should watch for. So as soon as the breakout of the wedge will happen, it will probably mean that market starts move up. So that's why, guys, if you have taken the long position here as we have suggested, now it's time to move your stop to the break-even. Now let's talk on the second scenario, why we still think that the downward retracement could happen. Mostly, guys, because of existence of the monthly pivot point, and that because this pivot point has been tested yet. And market stands relatively close. So if, for example, it will form A, B, C, D retracement down, it will lead us right to this area approximately. So you can see this will be the weekly pivot, a monthly pivot point. This will be also the weekly pivot support one. And we know that the pivot supports hold downward retracement on the bullish trend. So it is normal when the market retraces right to the weekly pivot support one. And until weekly pivot support one holds this retracement, it means that the bullish trend is still valid. That's why it's absolutely nothing curious with the possible two-leg retracement down right to this area. For example, if market will move slightly higher, this will lead us right to this area. So it's normal. Also, guys, this will be an area of the FIB support 1106. Since we have two different scenarios of the behavior of the market, we probably will apply two different approaches. What to do in both scenarios. First of all, as I said, if you already have the bullish position, move your stop to the break-even. Because if market will show ABCD retracement, you will be able to exit from your position with no loss and to take the long position later at the better level. If you do not have any position right now, but you would like to take the long position, you should wait for the two possible scenarios. So if market will show ABCD down, then you should watch for this area 1102, 1106 area. Here we should get some pattern that could let us to take the position. Or if market suddenly will continue move immediately to the upside, you need to wait the breakout of this top, because in this case market will erase any opportunity of the deeper retracement and will continue move high. So as soon as this will happen, when the market will exceed this top, that will tell us that the upward action has continued and we could try to take the long position. Yes, this will be not as attractive as here, but guys, retracement already is mostly over. So if you have missed the entry here, you could take the position only on some minor retracement when this top will be taken out. But still, till the 1140, 1145, where this will be pretty much room. So approximately $10 per contract. This will be the rest of the profit. So that's our current view on the gold market. So right now, gold shows nothing that could tell us that this bullish context has some problems. So it still stands very well, and it's really very close to final point. So 1140, 1145, that will be probably the end of the current bullish swing. So after that, we will probably market will turn to some larger scale. So some deeper retracement should follow, and we will turn to some A, B, C, D probable action if the upward action will continue. So that's why on the next week, maybe this setup maybe will be finished. So it will come to the logical final point. So let's see what we will get on the coming week.